Hey there guys, hope you guys are all doing very well out there. I've gotten lots of PMs and emails about inflation and questions about inflation. And, a lot of people are asking, where is the runaway inflation we used to see like in the 1970s? I mean, certainly prices have definitely come up, and especially in the last couple of months, but, all the TARP money, all the stimulus money and everything, it's been, at least it's been a year since the TARP thing's been enacted. So I kind of want to explain what's going on here. And one way to do it is to kind of explain the fractional reserve banking system. The Federal Reserve certainly has different methods they can use to manipulate the money supply and things like that. But this is definitely one big tool that they use. And I also want to explain something else too. The definition of inflation is just an increase in money supply. That's what inflation really is. A lot of people associate inflation with high prices. Well, that's a symptom of that. But the actual definition is just an increase in money supply. So if we just use that definition, for past 18 months even before the October, crash of last year, money supply has been dramatically increasing. And I'll kind of show you, I'll show you exactly how that's happening. So let's say I have $1,000 in Bank A, right? Bank A, is so nice to me. You know what they tell me? Hey, with direct deposit, we won't charge you anything to keep your $1,000 in there. Meanwhile, of course, it's getting eaten up by inflation, right? So with the reserve requirement, you have to keep $100. The bank has to keep $100 in reserves, but it can loan out now $900. Okay? So $900 goes out, and your Mr. Borrower here, we'll call Mr. Borrower. Mr. Borrower takes the $900, and by the way, of course, the bank gets to lend the money at 7-8% if it's a car, let's say, or heck, even 30% if it's a credit card. So let's keep this simple and just make this a simple transaction. Mr. Borrower goes to Bank B and deposits his $900 in here. And of course, Bank B is so sweet too. Hey, with direct deposit, we'll make sure we don't even charge you anything, So, aren't these banks sweet? They're making 15-30% on your money that is not theirs and it's just made out of thin air. They promise not to charge you. So anyway, Bank B now has this $900. They have the same reserve requirement, so they have to hold out $90. And so now they can lend out $810, right? So in this simple transaction, my $1,000 has now become $1,710. That's injected into the economy. So if you think about this, these amounts here are made of absolutely thin air, right? Nobody deposited any additional money. This is all from $1,000. So as you can see here, you can see now we have more monies out there, right? More money chasing after the same amount of products. And this is where the traditional inflation comes in. But wait, banks aren't lending, right? So this really isn't happening so much, right? So what's going on? Well, remember back to accounting 101, right? Your assets equals liabilities plus owner's equity. Okay, so as we all know, the housing markets and assets in general, well, there's been a deflation there, right? They've been dropping and dropping and dropping. Well, so that requires the banks to increase their equity, because they had to maintain this, right? So banks went to Congress and said, Congress, we need $700 billion right now, or we're going to go down and we're going to take everybody with us. You understand me? They committed financial terrorism, ladies and gentlemen, okay? Of course, Congress, in their stupidity, said, oh, I sure as heck don't want that to happen, even though all my constituents are calling me and telling me don't do this. Here's your $700 billion. Absolutely. Yes, sir. Since you donated lots of money to my campaign, here's your $700 billion. That, by the way, that you get to pay back and you get to pay interest on to the Federal Reserve. Anyway, so here's the $700 billion. Bank said, hey, thank you. Our assets look a little bit stronger. I should have erased that, sorry. Now our assets, we have a little bit more of this. Our assets still are declining. Hey guys, we need to change mark to model. We got to go from mark to market to mark to model. So now the banks can't value their assets at market rates. They can go back and say, you know what, this $100,000 asset, I think it's worth $120K. Wink, wink, right? So that helps too. It helps maintain their asset level. And here's another thing that's kind of scary, guys. Credit cards. right? These banks have loaned out lots of credit cards. You know, here's your $50,000 Platinum Plus credit card, ladies and gentlemen. I know you make $10,000 a year, but here you go. So what's happening here? Losses like crazy. What's that doing here? Yeah, it's bringing that down. What have they done to the Dow? That's gone up, right? Because they've taken your money and gone to the Dow, gone to, you know, Wall Street, ching ching, right? With your money, and they made the Dow go up in price. So that's why I keep telling people in previous videos, equity markets aren't going to change very much because they're not going to sell this because of this equation, right? And they have to maintain this, right? So that's what's going on with that. And especially as credit cards continue, losses continue, guys, I guarantee you they'll go back to Congress and ask for another insane amount of money too. And Congress is probably going to say absolutely. So now, where's the inflation going to come from in this scenario? Well, people who have gone from, you know, remember the Dow last year went from 14,000 down to 6,600. Well, people are exiting the markets, right? So where did those people go? Well, they went to the commodity markets, right? Absolutely. So this is, you know, gold, oil, silver, you know, wheat, you know, just commodities, right? So these prices started getting higher and higher and higher too, right? Well, at some point, you know, businesses, of course, they have to purchase these things to make things, right? Make products for us to consume. So as these things start getting more expensive, in the beginning, they didn't want to pass on that cost increase to everybody yet because they saw what was going on in the economy, with layoffs and all that. I mean, they sure don't want their, you know, their sales to go like that too much. I mean, they realize it's going to go down some, right? But they didn't want that to go down too much. Well, this keeps on going up and up and up because of what's going on, what people are seeing in the dollar and the U.S. economy itself. Well, it's starting to affect this. They've already cut staff. That's why there's layoffs going on left and right. You know, they've turned off lights and all that sort of stuff. But now they're at the point where this model is not going to work any longer for them, and they have to increase prices, okay? And so everybody's kind of, you know, looking at the competitors and seeing who's going to raise prices first. It's kind of like the airline industry, you know. American Airlines raises their prices first, and then of course all herd, everybody does it too, and everybody, the rest of the industry thinks, glad we didn't have to do that first, you know. So that's what's going on today. And of course, as they increase their prices to us, well, that equals the inflation that everybody is familiar with. So then we get to enjoy the inflation in this way, not like back in the 1970s where there was just so much you know, money floating out there. Today it's kind of a little bit different story. It's just because well, of course back then it was commodities too, but today it's definitely because the commodities are just, you know, totally going crazy right now. So that's where the inflation is coming in today. And then as the prices get higher and higher and higher, and we have more layoffs, then we have that ugly thing called stagflation. And you know what? I would see that actually coupled with deflation too, especially in the assets, you know, like houses and things like that, because as people lose their jobs, as things get more expensive, and we have a heck of an inventory out there, you know, home building just went nuts in 2004 and 5. Yet the assets have nothing to do but go down. So anyway, I hope this helps, guys. I just want to do a quick little video on inflation. You know, please rate and comment, and if you like it, hope you enjoyed it. Subscribe to my videos. We'll certainly have more. I may talk about treasury next time because that's going to be a whole other video in itself right there. So anyway, guys, hope you enjoyed the video. Hope you have a great day, and we'll be talking to you soon, okay? Bye-bye.